What is up, YouTube? Welcome back to Stocks by the Numbers. Today I wanted to dive into a software company that I know a lot of people have heard of. Name of the company in question today, Unity Software, ticker symbol U, listed here on the New York Stock Exchange. Company closed today $29.64, up 3 cents, 0.1% here on the day. If we look at the 52-week range, we see 21.22 all the way up to 109.99, right? So we have to know going in that we have a volatile, high-swinging stock. And, we can pop or drop 10, 20% on basically any announcement here. If we look at some of the financials, you can see we have a market cap of about 12 billion. We have a very negative EPS right now. This company is bleeding overall. They've been down for the last several days coming off this earnings report. As you see, very nice beat on the revenue side, coming in north of 450 million. And if we backtrack several quarters, you can see that these numbers have significantly grown quarter over quarter, and starting out at about 200,000 since the date of inception, climbed up to the high twos into the threes, and again now last quarter posting $450 million in revenue. So the company, the business overall, is beginning to generate more and more revenue for the company. The problem is that they're losing more than they're making. And if we come down here, even looking annually, you can see sub 400 million in revenue back in 2018, and then they climb up to north of 500, north of 700, north of $1 billion back in 2021. However, you can see that the income is basically half of the revenue that they're bringing in. So again, not the worst losses that we've seen here on this channel, but definitely could be better, and it's understandable as to why this company has been selling off as of late, especially coming off this last quarter, regardless of how much revenue that they're bringing in. Now, the company's trading again with a market cap of about 12 billion, and I believe they're doing about 1.2 billion for 2022 for the year. So this company right now, even after the sell-off, is trading 10 times yearly revenue to market cap. So just in general, in my opinion, this can continue to sell off. And of course, if we look at just the last several quarters here that have been reported, you can see that the income is just consistently declining quarter over quarter. And we know that Wall Street loves to reward companies that become profitable or are very profitable. And even though, again, this company's revenue is climbing, the earnings, the EPS side, is consistently decreasing. Now, looking at the balance sheet, you can see they're maintaining their asset level here, and even the liability's been maintaining about 2.5 billion, basically for the last 12 months straight. Every company has debt on their balance sheet, so that's really not a red flag. But if we switch over here, we look at the income statement. Again, you can see a couple of $100 million up to the high hundreds of millions, north of $1 billion. The cost of goods sold is increasing, but it's really nothing too crazy. As you can see here in 2021, off of 1.1 billion, cost of goods was about $250 million. So, you're looking at what is that, like 21.5%, 22%. Nice profit off of that. The operating expenses is, as you can see, what is really degrading the company on the earnings side, we could say. Operating expenses back in 21, almost 1.4 billion. Off of 1.1 billion total revenue coming in. So as we see, this is one of the problems with this company. Now again, this is a software company. Basically, you can use their software to make your own game if you'd like. If you're a game developer, 2D, 3D games, and then you can list them on the Steam store or whatever. But at the end of the day, like we always say, it's all about the numbers. And one thing I'm seeing here, if we look at the balance sheet, you can see, look at the assets have significantly grown just in the last 4 years alone, going from a little under 600 million back in 2018. 2021, you can see the company's approaching $5 billion in assets. So that's why they're on the right track. I just feel like they're getting beat up right now because Wall Street probably anticipated some of these larger numbers to come sooner rather than later. And by now, they were probably looking for much more narrow losses or potentially even, positivity on the income side. And that's not what the company has been showing. So, in my opinion, the sell-off here is justified. Again, the debt, 1.8 billion, nothing too crazy. And the book value, as we see, is roughly $8 a share. And the company, after the sell-off, is still trading north of 29.5. So what this means is this company realistically can drop down to like $12, $15, $17, and it would be completely justified. If we switch, oh, actually, I wanted to show you guys one more thing. Yeah, if we come over here, we look at our statistics. You can see trading about 7 times sales, 4 times book. But here, of course, the profitability ratios that we always like to look at, which sometimes go unnoticed. And a lot of people, don't put a lot of stock into what these numbers are showing you. When in reality, when we're talking about an investment, like a long-term tuck away, where you're accumulating shares every week, every month, every quarter, and you're hoping in 5, 7, 10 years that this is really going to pay off for you. If that's the way you're investing, these numbers are overweighted compared to the rest of the other numbers, because this is the actual pulse, if you will, of the health of the company. And as we see here, just looking annually, you can see the return on assets was starting to head in the right direction, starting from minus 24% back in 2019 and pulling back to minus 14%. And now it's currently sitting at about minus 21.5%. So it's a 50% jump year over year from where they were when they were climbing it up. The return on equity, basically the same scenario, was almost minus 46%, brought it up to minus 24%, now sitting at minus 38%. The return on invested capital was minus 46%, went all the way down to sub minus 17%, which is pretty darn impressive. And then it takes another jump back down to minus 26.25, we'll call it. The gross margin percentage was basically maintaining like in this healthy 70, high 70% range here for several years. Now it's currently sitting at 65.34. So as you're seeing, some of these numbers are starting to lighten off and head in the opposite direction. So again, this is why we're seeing the sell-off. The operating margin percentage was minus 34%, up to minus 27, back down to minus 35, almost minus 50, now sitting at minus 71.25%. The EBITDA, once again, earnings before interest, taxes, depreciation, amortization, one of the main fundamental indicators for the health of a company. And as you see here, over the years, basically dwindling. They came up slightly here, up to minus 21.4%, and then dipped right back down to minus 29.5%. The year before, about minus 41%. As of right now, currently sitting at around minus 57.75%. The net margin percentage we looked at before, the company is just completely bleeding on the earnings side. And again, same thing as the EBITDA. They're essentially tied in together. Not really tied, but they move off one another, obviously. And as you can see here, made a move from minus 34.5% up to minus 30%, and then pulled back again, minus 36.5%, minus 48%, now sitting at minus 77.5%, we'll call it. So this is why a lot of this sell-off has been happening. If we look here on the daily, you can see it really doesn't look too bad. Right? On the daily, it doesn't look like it's really swinging too much. However, if you look at the numbers on the right side of the screen, you can see that it was mid-40s and actually pulled back here in November to probably around 20 and change. So that's a 100% swing right there. So you are dealing with a volatile company with a volatile balance sheet. So I just want you to know that going in. So this is not something where, we can buy it today at $29.64 and it's going to be similar to like a Microsoft where it's just going to slowly climb for us, month over month, quarter over quarter. We're going to turn around in 3, 4, 8 years and it's going to be a phenomenal payoff. It definitely could happen. It definitely could happen. However, again, the main thing is pricing and timing. So why buy the company today at $29.64 when we could probably buy it at $19.64? Looking here on the daily, you can see the RSI is sub 40. Definitely wouldn't be an indicator, in my opinion, on this stock. As you can see, the RSI has dipped well below 30 at some points. Did have a rebound, but again, it's not immediate. As of recently, the company looked like it was really trying to maintain and hold this 200-day moving average of roughly 36.37. However, again, the big miss on the EPS side recently, and you can see the company has began chunking down. We have the MACD now turning downwards. So again, this is probably just the beginning, and it's probably going to keep selling off. On the weekly, RSI, same thing at about 40, not really an indicator. Again, the MACD was slowly rising really for the last 6, 7, 8 months, you can say. Now it looks like it's about to curl, and in my opinion, it's probably going to break. Definitely probably head down to that bottom Bollinger Band of at least the low 20s, if not potentially even lower. But Overall, again, decent company. I like what they do. I like the fact that they're basically helping out like startup game developers who want to, who might have an idea or might want to get into game development. They can use the Unity software and they could, make a little game, whether it's for themselves, for their own project, or of course, globally so that everyone can buy it and play it. But as of right now, the company just needs to increase their positivity. And based off the recent earnings, again, I do think the sell-off will continue. So right now, Unity, decent company, could probably buy it at half the price that it's currently trading at. So I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank everyone for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the channel, thumbs up. If you like the videos, subscribe to the channel. And moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're uncertain. So I wish everyone success. I hope everyone makes a couple of dollars. I'll see you guys in the next one. Thanks for stopping by.